Welcome back, investors. My name is Forrest. I invest in stuff, and you should too, or really that is my goal, really to demystify this stuff and make it as simple as possible. And really, this video today, we're going to answer the question, what is investing? I've actually shot quite a few videos now in my beginning YouTube journey, analyzing different stocks, giving my opinion on different stocks and whether or not you should buy them. But more recently, really in my personal life, people have asked me, Forrest, what does it actually mean to invest in something? That's a really good question, right? If you didn't go to school, no one has actually sat down with you and taught you, what it actually means to open a 401k or open an IRA, or even outside of that, what does investing even mean? Like, what does that mean? And I was actually, when I was first asked that, I was like, what does it actually mean to invest in something? And so my hope is in this video to break that down as simply as possible, so that you feel like it is something that you should do. I think that investing is something that everyone should do. It is easier than ever with all the apps that are available. And it is also one of the best ways, regardless of where you are in life, right, to greatly change your financial future, regardless of how old you are as well, right? It doesn't matter if you are 18, younger than that. It doesn't matter if you're 40, 50, 60. Investing in things is one of the best things that you can do to change materially how you interact with your life, or really change materially things that you can get out of life while we're here. Life is short, so we should try to make the best of it, and I think that it is just prudent and wise to sit down ultimately at the end of the day and spend some time learning these things. If you appreciate this content, please go ahead, hit the like button and subscribe to my channel. I'm going to focus the next period of time really more back on how-tos and informing people, in addition to some of the stock analysis that I'm doing. But it is the end of the year, so I am winding down some of my active trading because I have a lot of tidying up to do for tax season. So let's jump into what investing is. I actually didn't plan this video, but I have a pretty good idea of how I want to break this down. So one, what does it actually mean to buy a stock or to invest in real estate or to invest in anything? And then two, how do you actually realize the gains on that? I think that's really what investing really just boils down to, is one, how do you get in? And then two, how do you actually realize the gains or the change in value on those investments? And realizing that means how does the money actually flow back to you, right? If somebody says my investment went from $100 to $200, what does it actually mean? Do they have $200 in their pocket? Is it in their bank account, etc.? So let's talk about the first one. What does it actually mean to buy a stock? And for this, we're going to draw some photos on my iPad. Okay, so I'm recording my screen. First, let's talk about what it actually means to invest in something. So when you're investing in something, and the way that we think about it, especially in really my world, is you were buying a stake or a piece of ownership in something. So that might be a building, right? So I can draw a building here. Let's just say you're buying a piece of a building, right? It has a little door, and the value of this building, let's just say it's valued at $100,000, right? So you invest in real estate, you buy a piece of real estate at $100,000, and let's just say you put in, you and 10 other people all share in this investment. So you put $10,000 in. So here's you, your person, you put 10K, and then there are other people who also put 10K, and then etc., right? So you have 10 people times $10,000, which equals 100K. 2 zeros there. So you have $100,000, right? And so you buy this house. Let's say the value then of this building goes from 100,000. You got the same house, right? And now it is valued at $200,000. Cool. So you all make proportionate shares in this. Here's you, right? You had your initial $10,000 in, and now the value of your stake, your share of this, right, because you're an owner in addition to everybody else, is now $20,000, right? So you went and basically doubled your investment. Everybody did, right? Because you own 10% of the building, and regardless of the value of that building, you're going to own 10% of that building, right? And that's really what investing is. And so when you look at the different ways that people get those stakes, maybe you borrow money to acquire your stake, or maybe you have an agreement. Maybe you don't put anything up, but you just get a stake in exchange for services or something like that. The value of that stake, though, is proportionate regardless of what the asset does. So let's go ahead and clear this out, and we'll just use the massive eraser for this. Turns out my background actually wasn't all the way white. Cool. And so the same thing is actually true when you invest in equities, right? So let's say that there's a company. There's a company, and we'll call this company, this is their headquarters, right? This is their HQ. And let's just say that this company is Microsoft, right? So this is Microsoft, and Microsoft has, they go public, which they've been public for a long time, but they're gonna allow you to buy a stake in their company. So you and let's just say you're same 10 people, you all go buy a stake in Microsoft. There are 10 shares in Microsoft, right? And they're each valued at $100,000. So you have one piece of Microsoft for $100,000. Then you've got other people who also have their stakes of 100K, right? And there's 10 of you. So there's 10 shares outstanding in the market. 100,000 times 10, for anyone who's weak in math, is $1 million. So the total value of all of this is, I changed my marker color on accident. So the total value of all of this then is $1 million. So when you're listening to the news and you hear people talk about the value or the market capitalization of a company, this is what they mean. This is the market cap, okay? And all this means is that if you added up the current price, the current value of all the shares, all the outstanding shares of a company, then you get the market cap or the value of the company. And this changes daily, right? This changes based off of however people are buying and sharing these shares. So let's say that instead of being worth $1 million, the value goes up to 200 million, or goes up to $2 million, right? So in scenario 2, this goes to 2 million. You've doubled your money again, right? You own 10% of Microsoft. Your $100,000 that you put in is now worth $200,000. So you're pretty happy with that investment, right? You've made $200,000, or sorry, you've made $100,000. The value is now $200,000. What does that actually mean, though? Is there $200,000 in your bank account? Do you get $100,000 on the difference? Where does that money actually go? Same thing for real estate, right? When you invest in anything, what does it actually mean when the value changes? And so this is what we call by realizing your gains or losses. So let's look at this again. Instead, we're going to use a more real world example. Say that there's a company, and let's just call it NIO. So NIO is an electric vehicle maker. I own about 60 shares of this. The current price last time I checked today was like $44, right? So I own 60 at $44 per share. $60 at $44 per share, okay? Now, there are millions of shares outstanding of NIO, right? So instead of, in our last example, there were only 10 shares outstanding. I own 60 out of, let's just say millions of shares. These are all getting traded pretty consistently, right? And the value is fluctuating. So I bought in, I have 60 shares at $44 a share, and let's just say that this goes up to $88 a share. So one year from now, so let's say that it is December 2021 now, and these are now worth, I have 60 at $88 per share. 60 shares at $88 per share. That's the value in my account, right? So the value of these shares has doubled. I don't actually make that money until I sell those shares. And this is a pretty important concept, right? When you hear and talk about people saying, I made money or I lost money, what they really mean is that the value of all of my assets or the value of my investments has changed, which is very different from making money or losing money, because you haven't actually done that yet at all. And it's a really, really, really important delineation, especially when you talk about losing money. So if we do the inverse of this, right, and let's just say that 1 year from now, I made a very poor investment choice, and now I own 60 shares at $22 per share, right? That's terrible handwriting, but that's $22 per share here. That means that the value of my investments has went down by 50%, right? It's worth half of what it was. But I haven't lost that money yet. The only way that I lose that or realize my gains or my losses is when I sell. So if I sell these shares, now I'm basically saying, hey, here's this thing that I own. It's worth this much. And now I'm transacting and I get money in exchange for these 60 shares. So if I sell these, right, now I have 0 shares at $22 per share. Okay, so I don't own any shares. What I have is I have this money. I have money in exchange for these shares. And now I'm basically out of NEO. I'm no longer invested. So regardless of whether this is your 401k, if you're just trading in the open market, like a brokerage account, you don't realize your gains or losses until you sell. So very often one of the things that I will hear is from people is hey, I lost $20,000, especially in 401ks, right? Once you have these bigger account values, the swings can be pretty crazy, right? You lose $10,000 in a day, make $10,000 in a day. But really what people are saying is the value of my investments has changed by $20,000, $100,000, maybe even $400,000, right? Once you have millions of dollars invested. And these are some pretty typical swings that you might see once your account is that big. And I'm not gonna say that it's any less scary, right? If the value of your account dips $400,000, you're gonna feel that. But at the same time, people feel like they're geniuses when it goes up $400,000. But it's really the same thing. None of these are material until you lock in those changes by selling out of your position, right? So once you sell out of your position, you lock in those gains or losses. And that is what investing really is. So going very back to the beginning, right? 1, what does it actually mean to invest? That means that you are getting a stake in something, right? You're basically saying, I own X percentage of this thing. And then the way that you realize, or the way that investors make money, is when the value of that goes up and then they sell, right? You don't make money until you actually sell these things. Now there's a ton more complexity to this of, okay, you might hear about people who are worth billions and billions of dollars. Well, the fact is that they don't have all of that as cash, right? That just means the value of their assets is billions and billions of dollars. Doesn't make it any less crazy or awesome. I mean, they could sell those and then have cash, right? Have a cash equivalent, and then which allows you to go buy things. But it does matter in the sense that I can't buy things with shares of NEO or shares of Apple or shares of Microsoft. I have to sell, realize those gains. If I made money, I likely have to pay taxes on it. And then with the remaining cash, I can then go buy things, etc. Same with losses, right? If I lose money in the near term, but I'm bullish long term, or I think that the value is going to go up long term, which is what bullish means, that means that I can not lock in those losses and I can just sit tight and wait for it to go back up. Not always the wisest thing to do. Sometimes you have to cut your losses. Sometimes you have to take your gains. It's just a smart thing to do, especially if something gets really hot, it gets really popular, and the value goes up so much and you're like, there's no way it's going to be worth this much again. I'll just sell out a little bit and take this cash and reinvest it into something else with a little bit more upside. That's not overheated, right? So there are all these different ways that this can shake down, but I think what's really, really simple and important for you as someone who is watching this video and asking this question, what is investing? What do people mean? All these people throwing out fancy language. All it means is that they're buying a piece of something, right? It could be a piece of Microsoft, it could be a piece of Apple, it could be a piece of GoPro, it could be a piece of a building, It could be a piece of their friend's business, right? It doesn't have to be something that's publicly traded. You might be a partner in the coffee shop that's on Main Street in your town, right? Maybe they wanted to open a coffee shop and they raised money and split the profits with everybody involved. And so you're not running the coffee shop, but you put $100,000 into the pot and you make money based off of the size of your investment. And you could do that for anything and everything. So when you look out in your life and you're looking at all these businesses, realizing that one, most people do have partners, right? It's very common to have partners. And the people who are running the business and who own the business can and often are very different, right? And that's really just the way that business is done. On the same side, if you're looking to start a business, it's something to keep in mind that there are investors who are always looking to throw money behind things that are great ideas. And so kind of off topic from this, but again, is when it comes to investing and thinking of ways or really how this works, investors can be a great avenue or a great asset for creating startup capital, right? Well, this video is already longer than I wanted it to be, but hopefully that was helpful. If you thought it was, please go ahead and hit the subscribe button. Again, I'm gonna ask twice, I'm gonna ask 3 times, I'm gonna hit it. This is the 3rd time actually. Hit the subscribe button, hit the notification bell. I appreciate you. Put your feedback down in the comment section and let me know what you wanna know about next. But until next time, thank you for stopping by Start Investing, and I will see you in the next one.